Mr. Bajaj has purchased an old house for rupees 40 lakh. He paid a brokerage at 1% and stamp duty at 6% in the year 2020. To make it fit for his use, he spent an amount of 15 lakh on repairs and renovation through a contractor. A service tax of 15% was charged by the contractor. Now he wants to sell the property for 80 lakh. He was able to sell the house in 2021 to Mr. Dukal for a price of rupees 75 lakh. Mr. Dukal paid 1% brokerage charges and stamp duty charges at 6%. What is the total acquisition cost of purchase for Mr. Bajaj? 40 lakh is the amount he has paid plus 6%. 1% as brokerage charges means 1% of 40 lakh 40,000 plus 6% as stamp duty of 40 lakh means 2 lakh 40,000. So total cost of acquisition for Mr. Bajaj is 42 lakh 80,000. And cost to cure house of Mr. Bajaj. He has done a repair and renovation of 15 lakh. Then he has paid a service tax at 15% means 2 lakh 25 lakh. So total cost to cure is 17 lakh 25,000. So what is the total investment? His total investment is 60 lakh 5,000. 42 lakh 80,000 plus 15 lakh plus 2 lakh 25,000. So total is 60 lakh 5,000. So total purchase for Mr. Duggal, he has paid a price of 75 lakh, 1% of stamp brokerage charges, 6% of stamp duty. He has paid a total purchase price for him is 80 lakh 25,000. How much is the gain? Mr. Bajaj, he has an accumulated sum of 60 lakh 5,000 which he has spent over the property. He has sold this property for 75 lakh. So 14 lakh 95,000 is the gain he has. So what is the percentage gain? How much the net gain of Mr. Bajaj if he paid a tax of 9%? Means tax at 9% means 1 lakh 34,550. So net gain will be 14 lakh 95,000. One is 1 lakh 34,550. So net gain will be 13 lakh 69,450. So what type of obsolescence is rectified in this case? This is functional obsolescence. In this case, cost to cure obsolescence is viable. Yes, it is viable because after doing cost to cure, he was able to sell it for a net gain of 14 lakh 95,000. So we will say that cost to cure obsolescence is viable. Then another thing is weighted average cost of capital. Many times you may get this type of question WACC, weighted average cost of capital. So it represents its blended capital across all sources, including common shares, preferred shares, and debt. The cost of each type of capital is weighted by its percentage and total capital, and then they are added together. So if you have to find the value of the property, then for calculating weighted average capital cost, you have to use this formula. Cost of equity multiplied by the percentage of equity plus cost of debt multiplied by the percentage of debt. So we denote cost of equity with WE and percentage with KE. Similarly, cost of debt as WD and percentage of debt as KD. So here we will be doing this example. See here in this case, he has taken two loans. First loan at 35% of purchase price at the rate of 14% and second loan of 25% of purchase price at a rate of interest of 13%. The company is fetching a net income of 65 lakh per annum. the company expects 13% return on equity. So see here how to proceed. WE, mean of weightage of equity, WD, percentage of debt, K is cost of equity, KD is cost of acquiring debt. So WD1, first loan he is getting at the rate of 35% means 0.35. And its cost of acquiring is 14% means 0.14. Second loan he is getting at it for 25% and whose cost is 20% means 0.2. Means out of 100% capital, 35% plus 25%, it will be in the form of debt. So what will be the equity? It will be 100 minus 35% minus 25% means 40% will be the equity of the owner. And cost of equity is 13%, which is 0.13. So you apply the formula WACC WE into KE plus WD1 into KD1 plus WD2 into KD2. So it is point equity is 0.40 and cost is 0.13. First loan is 0.35% at 0.14%, 0.1 or 14% rate of interest. Second loan is 25% at 0.20%. So total WACC, it comes out to weighted average capital cost comes at 15.1510%. And then you 65 lakh divided 65 divided by 0.151. So value is 4 crore 30 lakh 46,357, or we can say it is 4 crore 30 lakh 46,000. So many times if you have to use this WACC weighted average, then you can use this formula. So any next questions you can do, they are simple one. So many times you have to calculate EMI on loan. So what is the formula for that? What is the monthly installment to be paid for redemption of rupees 10 lakhs on mortgage of 7.9% if it is to be repaid in 7 years time? Okay. So in this case, the formula we will be using R plus IC into loan amount. This is the formula which we will be using. R, you know, it is rate of interest which is 0.079. And in this case for IC, you will take the same rate of interest as 7.9. So IC, you know the formula for IC is R upon 1 plus R raised to power n minus 1. You put all the values here. The value of IC will be in lakh 13, 19, 1372. 1,91,372. So the monthly installment will be divided with 12 of 15,947 will be monthly installment. So in this way, you can calculate EM. This is the formula for EMI. R plus IC into loan amount. An investor could invest 50 lakh in a new house that he expected to be able to sell in a decade for rupees 75 lakh. Alternatively, she could invest her 50 lakh in a real estate project offering 10% return every year for the next 10 years. Which of the two options will be better option? How will you find out that? How will you find anybody?
By calculating present value by both methods, present value of 75 lakhs
So,
and
okay.
present
So you
present value
find
of
present value of
50,000.
75 lakh after 10 year at 10%, it will come out to be 28 lakh 95,000. You multiply it with the present value factor, which is 1 upon 1 plus r raised to power n. Okay. And for this 50,000, you can find the value, present value for every year, and then you add up.
Cumulative
So 50,000 present value factor for first year will be 0.9029, for second year, for third year. You calculate all, then add them up. 30 lakh 71,500. Either you do it in this way, but if it is same amount every year, this is basically discounted cash flow method. We are using discounted cash flow method here, where you are calculating present value in this way. That is a longer procedure. This is applied if the amount varies every year. Otherwise, if the amount is same, you can use another method which is very simple. What is that method? You can simply calculate capitalized value by using net income multiplied by YP. Of course, it is less than 50 year, you will be using YP single rate. So you calculate 50,000 multiplied by YP single rate, you can calculate, you know the formula. It is 1 upon R into 1 minus PV. So if you calculate, it will come out to be approximately 6.14. So you multiply 50,000 with 6.1000, so you will get the same value. So if this amount is same, basically YP is also calculated in this way also. If you divide this 30 lakh 71,500 with 50,000, so value will be 6.14. This is the basically YP is a multiplying factor which can convert your annual income to the capitalized value. तो अगर अगर लेमैन की लैंग्वेज में वाईपी समझना हो तो इट इज ए मल्टीप्लाइंग फैक्टर with which can convert your annual income to the capitalized value. Otherwise, if the income is varying every year, then of course you have to use this formula or this method. If it is same every year, you just simply calculate YP, that will be easier. Clear? Any doubt about that? So in this way, here he will invest 50 lakh plus 30 lakh 71,000. In this case, he will be getting 80 lakh 71,500. And in first case, he will be getting only 28,000, 28 lakh 95,000. Of course, he will should invest in real estate project where he will be getting 10% return every year. Clear? Any doubt? Mr. Raju has an apartment having 6 floors. He has given first 3 floors on rent. The rest of the floors are under occupation of the owners. The prevailing rate of owner occupied premises in the locality is 50,000 per square meter. FSI is 1. For tenanted portion, rate of capitalization is 9%. Rent Act is applicable. So many times in IBB examination, you get such type of question which is partially rented, tenanted, and partially owner occupied. Here, first 3 portions are given on rent out of 6, and the rest of the portion are under the occupation of the owner. So for the owner occupied, we will be using cost approach or any other approach, and for the tenanted portion, we will be using rent capitalization method. This you have to remember.
प्रैक्टिकल लाइफ में भी आपको कोई ऐसा सिनेरियो मिल सकता है जिसमें एक मल्टी स्टोरी बिल्डिंग है, उसमें कुछ पार्ट रेंट पर दिया हुआ है, 1, 2 और 3 फ्लोर्स, और बाकी के फ्लोर्स ओनर ऑक्यूपाइड हैं। इधर नीचे के फ्लोर्स हो सकते हैं या ऊपर के फ्लोर्स हो सकते हैं। तो उसको कैसे वैल्यू करेंगे, दैट इज द बिगेस्ट चैलेंज फॉर सम वैल्यूअर्स। तो उसको किस तरह से हम कर सकते हैं, क्या क्या उसमें प्रिकॉशन लेनी है, और क्या क्या कौन कौन सी अप्रोचेस इस्तेमाल कर सकते हैं, कौन सा मेथड इस्तेमाल कर सकते हैं, दैट वी विल सी इन दिस क्वेश्चन।
So land area is 2000 square meter. Floor area of each floor is 280 square meter. Number of tenant on each floor is 4. Rent from each tenant is 1500 per month. Property tax per annum is 10% of annual rent. Non-agricultural tax annually is 1500. Insurance premium to be paid annually 15,000. Repair cost is 5% of annual rent, and management charges are 10% of gross annual rent. And FSI is given as 1:1. See here how to proceed. What is the present value of tenanted portion? Number of floors on rent is 3. Number of tenant on each floor is 4. Number of rent received from each tenant is 1500 per month. So total rent will be 3 into 4 into 1500. Total rent received is 18,000 per month. And yearly you multiply it with 12, so total rent received per year is 2,16,000. Then out of these, he has to pay property taxes 10%, non-agricultural tax 1,500, insurance 15,000, repair cost 5% of 2,16,000, which is 10,300. Management charge is 10% of 2,16,000, 21,600. So if you calculate all the total outgoings, add these up, it will come out to be 70,000 approximately. So net income will be 2,16,000 minus 17,000, 1,46,000. So rent act is applicable. It means it will be perpetual. You cannot eject the tenants. Only thing is you can get this much of rent every year. So you capitalize it at 9% perpetually. The value for the tenanted portion comes out to be 16,22,222. So this is simple. But how to calculate the value of the owner occupied portion? That is important. So here you have to calculate what is the present value of owner occupied portion. Area for the owner occupied portion is 3 floors, each having area of 280, and rate per square is 50,000 per square meter. So the value of owner occupied portion comes out to be 4,20,000. So total value of the property comes out to be 16,22,222 plus 4 crore 20 lakh. Total value comes out to be 4 crore 36 lakh 2000 to 22. So what is the value of owner occupied portion percentage? You can calculate easily. It is 96.28% and 3.7% is the value of the tenanted portion. So you can do it easily. This is an important thing. Important question. Mr. Chetri has purchased an agricultural land and started a rubber plantation trees farm in Assam. The rubber production from the trees will start after 25 years. The beginning cost of site purchasing, preparation and planting of trees and other miscellaneous expenses was worked out to be 60,000 per acre. The yearly maintenance charges are 5,000 per acre. What would be the cost of rubber per acre when the production starts if the rate of interest is 7%? Yeah. The cost of plantation of trees and other miscellaneous charges per acre is given 60,000, which was, if you do a valuation after 25 years, so it means you have deposited 60,000 in the banks, say, means you have invested 60,000 if it for 25 years. So the cost of 60,000 after 25 years means you have to find its future value after 25 years. So its future value will be, you know the formula, you have to multiply it 1 plus r raised to power n. So multiply it with 1 plus r is 7%, 0.07 raised to power 25. So this present value of this value of, sorry, this 60 lakh after 25 years will be 3,25,620. And what will be the value of this 5,000 per acre? How will you calculate this its value? How will you calculate the value of this 5,000 per acre? What you will do? Anybody?
Sir, accumulated sum of
G. We will be finding a cumulative sum of rupees
mm,
5,000 per month, sorry, per acre per 25 years. So you can do easily 5,000 for this formula, you know, for a cumulative sum is FV minus 1 upon R, which is 1 plus R raised to power n minus 1 upon R. You put all the values, R is 0.07, n is 25. You put the value, so if you have been investing rupees 1 every year at 7%, you will get 63.243 after 25 years. But you have been depositing, investing 5,000. So it means this 5,000 investment will become 3,16,215 after 25 years. So what will be the total investment? You can calculate. So what type of this rubber plantation is? It is an investment project. Any other things you can calculate? What is the total cost of rubber project on maturity per acre? You add cost of 60,000 and cost of 5,000 per year. So total cost of the project per acre will be 6,41,835 after 25 years. Means at the maturity when the rubber production will start. Mr. Danny has put his house on sale. The land area of the property is 2,500 square meter and plinth area of ground floor and first floor is 3,250 square meter. The prevalent rent rate is 40,000 per square meter and replacement rate is 17,500 per square meter. The building is 5 years old. Find the market value of the property assuming 10% salvage. Life of the building is 60 years. So it is as simple as it is. You just calculate the cost of land and you calculate the cost, depreciated replacement cost of the building. You add up, that will give you the value of the property. See here, plot area is 2,500 square meter. Rate is 40,000 per square meter. You calculate the land cost, which comes out to be 40,000 into 2,500. Then plinth area rate is 17,500 per square meter. Length area is 3250 square meter. So cost of construction is 5 crore 68 lakh 75,000. Age of the building is 5 years. Life of the building is 60 years. Salvage value is 10%. You calculate depreciation every year is 1.5%. So total depreciation for 5 years will be 7.5%. So depreciation value will be 7.5% of 15 crore 68 lakh 75,000, which is 42 lakh 65,000 625. So depreciated value will be 5 crore 68 lakh 75,000 minus 42 lakh 65,000 625. So it will be 5 crore 26 lakh 9,375. So total market value land plus building. So it comes out to be 15 lakh crores 26 lakh 9,375. C 15 crores 26 lakh 9,000. So now see, he is getting following offers. That offer one 15 crore 26 lakh 9,000 immediately. Or 15 crore immediately plus 1 crore every year for 1 year. Or 14 crore 50 lakh immediately and 1 crore 50 lakh after 1.5 years. Or 14 lakh immediately plus 2 crore after 2 years. Which offer is the best? How will you calculate that?
We have to calculate present value of 1 crore, 1.5 crore, and 2 crores.
We have to do in this way. So in the first question, first he will be getting 15 crore 26 lakh 9,000. Second, 15 crore immediately, 1 crore after 1 year. After 1 year, present value factor is 0.952 means he will be getting 95 lakh 20,000 means he will be getting a total of 15 lakh 95 15 crore 95 lakh 20,000. Similarly, in the third case, 14 crore 50 lakh immediately plus 1 crore 50 lakh after 1.5 year. So value of 1 crore 50 lakh present value will be 1 crore 39 lakh 35,000. So total value he will get 15 crore 89 lakh 35,000. In the fourth case, 14 crore immediately plus 2 crore after 2 years. The value of 2 crore after 2 years will be 1 crore 81 lakh 40,000. So total he will get 15 crore 81 lakh 40,000. So see here, he will be getting maximum value. So in case of offer 2, so offer 2 is the best. Clear? Any doubt? So rest of the questions are easy. After 10% discount, you can calculate even then this second option will be better. or in the question he may ask you that if he has to pay capital gain of 40 lakh, which option will be better? Many type of question will be there. Again, second option will be better. So you can do the only thing you should know this thing. Mr. Nirmal wants to purchase a petrol bunk outlet in Jalandhar. The tentative outlet is situated on Amritsar Road in one of the busiest road of the town. The total road has a traffic of 500 passenger car unit per hour. The total income from sale of diesel, petrol, mobile oil and other items is rupees 4 crore. For the land company is paying a rent of 5 lakh per annum. Property tax at the rate of 2% of annual rent. Staff salary and other outgoings are 1 lakh per month. Other expenses for running the business are rupees 2 crore 30 lakh. Rent of capitalization, rate of capitalization is 12%. Find the first thing you have to find the total income of the owner. So what is the total income? From what are the incomes he is getting? First thing he is getting 4 crore from the sale of petrol, diesel, mobile oil and other items. Other thing he is getting 5 lakh per annum as in the place of rent. So it means 4 crore plus 5 lakh. So total income of the owner is 4 crore 5 lakh. And what is the total expenses of the owner? It is given property tax at 2% of 5 lakh, which is getting in the form of rent, which is 10,000. Staff salary is 1 lakh. Annual staff salary will be 12 lakh. Other expenses are 2 crore 30 lakh. So add up all these. So total expenses are 2 crore 42 lakh. What is the net profit? 4 crore 5 lakh minus 2 crore 42 lakh 10,000. So you calculate 1 crore 62 lakh 90,000. And YP at 12% you can calculate it is 100 upon 12, which is 8.33. You multiply net profit with YP, that will give you the value of the petrol bunk, which is 13 crore 57 lakh 50,000. So this is similar to income approach, but instead of rent here you will be getting profit and net profit. So rent will be replaced with profit and net will be replaced with net rent. Otherwise everything is same. Similarly, you can do this question. Mr. Singh has a plot of 5,000 square meter in a commercial area of the city. The permissible FSI for commercial building is 1.1 is to 2. Mr. Singh has got two options, either to construct an office building or to construct a mall. So rent per square meter for office building will be 300 per square meter. For mall building, it will be 350 per square meter. Cost of construction in this case will be 35,000 per square meter, and for mall building it will be 38,000 per square meter. Expenses will be 25% of gross rent, and in mall building it will be 30% of gross income. Expected yield in case of office building is 12%, and in case of mall building is 13%. Vacancy rate is 3% in case of office building, and it is 4% in case of mall building. This is the data given to you. You have to check which of the two options is better. So how will you proceed in this case? How will you proceed in these cases? In such case, anybody?
Sir, we can calculate gross rent by both the method for both type of buildings, and then net rent after deducting vacant portions and expenses, and then the net net rent may be capitalized by the expected yield of 12% and 13% respectively. Which one is
Yes,
higher, then that type of project may be suitable.
yes, sir. You are right, sir. So see here, plot area is same in both the cases. FSI is same in both the cases. Rent here is 300, here it is 350. Okay. So total rental income. Total rental income. How will you calculate this? It will be 300 into 5,000 into 2. It will be 3 crore. Similarly, 350 into 5,000 into 2, because you can construct FSI is 2, so area may be 1,000 square meter. Here also the area may be 1,000 square meter. Rate is 300, this is 350. Okay, this is the total rental income generated, out of which expenses are given to you 25%, and in this case 30%, means 25% of 3 crore here, 30% of 3 crore, 75 lakh and 1 crore 5 lakh. We can see 3% and 4%. You calculate, it is 90,000, it is 1 lakh 40,000. So net monthly income, here this is net monthly income. 21 lakh 60,000, it is 23 lakh 10,000. So net annual income, you multiply it with 12, that will give you net annual income, because you have to do calculation annually. And then yield here it is 12%, it is 13%. For 12%, YP will be 100 upon 12, 8.33. For 13%, 100 upon 13, it will be 7.69. You calculate capitalized value for office building, it comes out to be 21 crore 59 lakh 13,600, and this comes out to be 21 crore 31,000, 21 crore 31 lakh 66,800. So of course, office building is better, as it has more value of 27 lakh 46,800.
But there was construction cost was given. Why we are not considering that one building would need additional construction cost? Okay,
Cost of construction of building is 35,000 per square meter basically. From there you can take. And the second one is 38,000. You can do that also. So otherwise you can calculate in this way. A freehold property having an area of 900 square meter is leased out for a period of 20 years for installation of petrol pump. It is mentioned in the lease deed that the lease may be extended at the option of the lessee for a further period of 10 years after the expiry of lease. The gross annual ground rent agreed in the lease deed is 1,34,400. The outstanding amount for betterment charge on the property is 42,700. Work out the value of the property. See here. There are three things here. First thing is it is leased out for 20 years. After, again, it can be renewed for another 10 years. And after that, remaining period. There are three types of period in this case. Means for the first 20 years, for the next 10 years, and for the remaining period in perpetuity. Gross annual rent is given to you as 1,34,400, out of which he has to pay 42,000. Let us allow 34,400 towards management and collection charges. Let us suppose so net income will be 1,30,000. So see here, YP. Now the thing is how to calculate YP. See here, it will be different for the first 20 year, it will be different for the next 10 year, and then for next 30 years it will be different. So if you calculate YP for 30 years and 20 years respectively, allowing an interest of 12% on capital and 5.5% on redemption, so YP will come out to be 7.47 and 6.7 respectively. So see here how to proceed. So for the first year, for first 20 years, you will be applying YP 7.427. For the next 20 years, what will be the value of YP? So you have calculated. The difference will be 6.73, 0.74 for 20 to 30 years. And for the next 30 years, again you can calculate perpetuity. So it will be difference will be 0.28. So you add all the values YPs instead of getting calculation separately. You add all these three YPs, and the value will come out to be YP will be 8.79. So net income is 1,30,000 multiplied by YP, which is 11. Your income is 11,42,700, and 42,700 are betterment charges. So the value of the property is 11 lakh. So if the YP change value changes every year, so here you have to apply YP reversion. We'll be taking some case studies based upon joint venture. For joint venture, you have to remember certain formulas. FSA or FAR, this is equals to total area, total covered area of all floors divided by total plot area. Undivided share of land, it is super built up area of the particular flat divided by FSI. Then the land component, if you have to calculate land component, it will be land rate divided by FSI. Percentage of common area is total common area divided by sum of plinth area of all the flats multiplied by 100. And joint venture ratio, you remember, it is always share of promoter will come first and then share of the landlord. So you have to remember these formulas in case of joint venture ratio. In a plot of 16,320 square feet, the landlord Mr. Sachin and developer Mr. Sushil intend to construct an apartment through joint venture. The total built up area is 32,640 square feet. There will be 20 flats. Each flat will have a built up area of 1,632 square feet. The prevailing market rate of for the land in the area is 12,000 per square feet, and the cost of construction is 2,800 per square feet. Assume the promoter's profit as 20%. You have to answer certain questions. What is floor space index? So FSI, you know, covered area of all the plot or total built up area divided by plot area. So plot area is 16320 square feet and total built up area is 32640 square feet. So FSI will be 32,640 divided by 16,320. FSI is 2. What is undivided share of land for each flat? So it is built up area of the plinth area of the flat divided by FSI. You know the formula. So 1,632 divided by 218, 816 is the square feet is the undivided share of each flat. Then what is composite rate of flat? Undivided share is 816 square feet multiplied by land rate is 12,000 per square feet. So land component is 97 lakh 92,000. Building area is built up area is 1632 square feet. Rate per square feet is 2,800. So building component is 1632 multiplied by 2,800, 45 lakh 69,600. So you add land component plus building component. So composite rate of the flat is 1 crore 43 lakhs into 1,600. Promoter's profit is 20%, so total selling price will be 20% increase of 1 crore 43 lakh 61,000. So 1 crore 72 lakh 33,920. So composite rate, you divide sale price with the saleable area. So 10,560 square feet. What is the selling price of each flat? You have already calculated, which is 1 crore 72 lakh 33,920. What is a joint venture ratio? This is important. So here you need not to take into profit component here. Only share of owner or landlord and share of the builder or investor is taken into account. You remember this thing. So land component, you know, it is 97 lakh 92,000 and building component, you know, it is 45 lakh 69,600. You add all of them, it is 1 crore 43 lakh 61,000. So landlord's share will be 97 lakh 92,000 divided by 1 crore 43 lakh 66 1 crore 43 1 lakh 61,600. 68% is landlord share. It means developer's share will be 32%. So we will write it joint venture ratio as 32 is to 68. Developer's share is written first and then landlord's share is written afterwards. So whether there is any impact of guideline rate while fixing the composite rate and venture ratio? No. Guideline rate has no effect while fixing the composite rate and joint venture ratio.
Excuse me, sir.
Yes.
Sir, we are not using the promoter's profit 20% was there. We are not using this in joint venture ratio.
So in joint venture ratio, the only thing you have to take is how actually this is a profit he wants for selling. But here what they have invested in the project, how much share he has invested in the project.
Okay.
It has nothing to do with the profit. That is the thing we have to consider. Any other doubt? Joint venture development project is proposed at Kolkata. Area of the plot is 1200 square feet. Permitted FAI on the plot is 1:8. Cost of construction is 650 per square feet. Sale rate of the flat is 1800 per square feet. Find out the share of the landowner in the new construction to be undertaken on the plot. The cost of finance is 14% of the cost of construction. Developer's profit is 30% on his investment. Administrative and other expenses are 5% of the cost of construction. Assume 10% area is for free balcony area. Assume it takes 2 years to construct and sell the project. This type of question you may get in real life also. So see here, FSI is 1.8, land area is 12,000 square feet, and 10% is free balcony area. It means you can increase permissible construction by 10%. So total construction will be 12,000 multiplied by 1.8 into 1.5. So total construction which is permissible is 23,760. And sale price is 1800 per square feet. So sale value of all the flats is 4 crore 27 lakh 68,000. This is the sale price of all the flats. Now see, expenses to be incurred by the developers. How much he has to incur? He has to construct the building. So 23,760 square feet he has to construct at the rate of 650 per square feet. 1 crore 54 lakh 44,000. Okay. So let us suppose offer this he has to pay 14% interest. So time period is given 2 year. We assume that he has to pay an interest for half of the period for 1 year. So interest he will have to pay over 144 lakhs. At over 14% will be 21 lakh 56,000. So total he has to invest 1 crore 76 lakh. And then he wants 30% on his investment cost of 1.7 lakh. Means he want an profit of 52 lakh 80,000. Then he has to spend 7 lakh 70,000, means 5% of 140 lakh over administrative and other expenses. So total expenses will be 1 crore 76 lakh 52 lakh 80,000 and 7 lakh 70,000, means total expenses is 2 crore 36 lakh 50,000. So out of 4 crore 27 lakh 68,000, investor share will be, developer's share will be 2 crore 36 lakh 50,000, means 55.29%. Means developer will get this much of the area for sale, and the remaining will be the part of 10,623 will be the part of landowner. So out of which he can, if he sell at 1800, so his share will be 1 crore 91 lakh 21,400. So many times you may get this type of question. Clear any doubt? Now we will be taking certain case studies based upon insurance. So basic thing in insurance is under insurance caution. Under insurance caution, it is sum assured at the time of policy divided by the value of the asset on the date of claim. So basically what happens is when you do get insurance for a building, basically it is standard fire policy, to pay some premium, and the company will ask for a premium based upon your declared value. Whatever value you declare, on the basis of that, company will calculate premium and you have to pay that premium. But at the time of any loss, company will appoint a surveyor and loss assessor. He will calculate the depreciated value of your asset. And if it's depreciated value of the asset and the date of claim is more than the declared value which you have declared at the time of getting insurance, then it will be considered as under insurance. And you will not get full loss, and your loss amount, the amount you will get will be proportionately, or it will be reduced on pro rata basis. How it is done, we will discuss now. And second thing you have to remember in case of buildings, as we have already discussed, land component, land part, or anything below the land is not taken into consideration for insurance purposes. Means land part and foundation part is not to be considered in case of insurance. Only superstructure part is taken into consideration. Assess the claim payable for a partial loss by fire to an old building, factory building built in 2015. Actual damage by fire is 12 lakh. Standard fire policy for 25 lakh is taken by the factory owner. Factory built up area is 700 square meter, and the replacement cost on date of damage in 2025 is 16,000 per square meter. Assume the foundation as 10%, life of the property may be taken as 40 years. See here, replacement cost of the new building in 2025. 700 square meter is the area and 16,000 per square meter is the rate of construction. So it is 1 crore 12 lakh. But you have to subtract the cost of foundation out of it because you only have to take cost of superstructure into consideration. It is given as 10% of, so 10% of 1 crore 12 lakh, it is 11 lakh 20,000. So net cost of construction will be 1 crore 80,000. Age is 20 years, life is 40 years. So depreciation you calculate 20 upon 40 into 100. So generally in case of insurance, salvage value is not taken into account. We assume that everything will be reduced to ashes in case of insurance, in case of fire. So 50% is your depreciation percentage. You calculate the depreciated value which comes out to be 50 lakh 40,000. But you have taken insurance policy for 25 lakh. It means value at the time of claim is 50 lakh 40,000, but you have taken the policy of 25 lakh. So it is under insurance. So you have to calculate under insurance coefficient, which is value at the time of policy and divided by value at the time of claim. So it is 49.6% under insurance. So actual loss suffered is 12 lakh. So 49.6% of 12 lakh you will get only 5,95,200 in this case instead of getting 12 lakh because it is under insurance. RCC roofed building of a 25-year is required to be insured under standard fire policy. Advise on fair insurable value of the factory building on depreciated cost basis from the following data. Plinth area of the factory, ground floor is 600 square meter, first floor is 400 square meter, replacement cost is 17,500 per square meter, age of the building is 25 years, total life of the building 60 years, and foundation is 10%. So total built up area 600 plus 400 is 1,000 square meter. Rate is 17,500 into 1,000 square meter means 1 crore 75 lakh. 10% towards cost of foundation means 17 lakh 50,000. So net value of superstructure is 1 crore 57 lakh 50,000. Age 60 25, life 60, salvage is generally considered as nil. So depreciation percentage is 25 upon 60 into 100, 41.66. So depreciated cost 41.66 into 1 crore 57 lakh. So depreciated value comes out to be 61 lakh 61,000. So insurable value is 65 lakh 61,000. So generally this value is increased up to 25% because it is generally taken for 3 years and after 3 years value will increase. So we will take into account escalation extension. So we increase it by generally by 25%. You can advise a client to take insurance policy at 22 lakh.
Sir, I have one question, in general question. Are you able to hear me, sir?
जी जी सर.
सर एक क्वेश्चन ऐसा है, अगर इन केस ऑफ द फ्लैट, if there is any interior work, shall that cost can be considered in insurance value?
Yes, you can take consider that into insurance value,
No, means
but
actually while the claims they gave the cost for that
but
interior work also.
if you have in your when you declare your value for insurance, if you had calculated that and given it, then you can get. But
Okay,
at the time of insurance, you have not declared anything except your superstructure part. Then you cannot claim at the time of
okay, okay. Thank you, sir.
And now,
instant.
you have to see the percentage of depreciation per year as per
Yeah.
interest schedule. If it is, yeah, or the life of that particular interior. Sometimes
Okay,
most of the interior works are having depreciation of more than 30 to 40% in a year. So
okay,
that may be the case. They are not considering the interior work.
okay. Thank you, sir.
A standard fire policy with the reinstatement clause was taken for 261 lakh for a factory building RCC roof 1700 square meter for 25 years old. Replacement cost is rupees 22,000 per square meter. Fire loss is 50 lakh. Assume life as 60 years. Salvage value is nil. Plinth and foundation is 15%. First thing you have to calculate claim payable is how much, and if the policy excess is 10,000 is to be considered, then what is the claim payable? You see here, sum insured is, sorry, it is 2 crore 61 lakh. Area of the building 1700 square meter, 25 years is age. Replacement rate is 22,000 per square meter. Fire loss is 50 lakh. Life 60 years, salvage value nil, plinth and foundation 15%. See here, special clause is given, reinstatement value clause is included. If this clause is included, we do not need to take depreciation into consideration. So in this case, if reinstatement clause is added, depreciation is not to be considered. Okay, clear? So area of the building is 1700 square meter, replacement rate is to 22,000 per square meter. Replacement value comes out to be 1700 into 22,000, 3 crore 74 lakh. Age of the building 25 years, life of the building 6 years, salvage value nil. So depreciation is not to be considered. Only thing you have to calculate reinstate value of the building less 15% of the foundation. That is to be considered. So 85% of 3 lakh, 3 crore 74 lakh is 3 crore 70 lakh 90,000. You have taken insurance for 261 lakh. So it means percentage of under insurance is 82.1%. So instead of 50 lakh, you will be getting an amount of 41 lakh 5,000. Clear? Any doubt? Now we will be doing certain formulas you don't know, but how you can do these questions with the help of Excel directly. Most of the formulas are inbuilt in the Excel, and how we can use that, we will discuss it now. See here, a man purchases a land having an area of 4,800 square meter at 20,000 per square meter. He then subdivides it into plots. The net area after provision for roads is 4,032 square meter. If he expects a return of 8% on his investment, all the subplots are likely to be sold in 3 years. At what minimum price should he sell all the plots without any loss? Means he has initial investment of 20,000 into 4,809 crore 60 lakh. So he has deposited it, means if we take it from accounting point of view, means he has deposited this sum because it has taken 3 years, means he has deposited, if has deposited in the bank at 8%, he would have get 12 crore 9 lakh 60,000. So it means he should get at least this much amount 12 crore 9 lakh 60,000. So net area is 4,032 square meter. So it means sale will be 12 crore 9 lakh 60,000 divided by 4,032. So he should sell at a rate of 30,000 per square meter. So one thing is you can either use this formula or you can use Excel to calculate the future value of 9 crore 16 lakh. So here it is rate, NPER, PAMT, you have to find present value. See here how it will be done. So you put your formula equal to FV. See here, this dialog box. Rate is 8%. Then NPER, it is number of years. It is 3 years. In the PMT, nothing is to be paid. If it is to be done every year, then you can put PMT. So present value is 9 crore. So only simply a comma is to be placed for PMT, as nothing is to be filled here. And then your present value is 9 crore 60 lakh, 9 crore 65, comma type. In the type you can simply fill 0. Payment is to be made at the end of the period. By default it is 0, either you write it or not. Bracket 1, you put all these values, you will get 12 crore 9 lakh 3,235. So you can use
And
directly.
this is on the request of a few participants who are not conversant with Excel. Most of the younger generation participants are conversant with these Excel formulas. You can do this directly with formula bar also. Yes, sir. Please continue.
Similarly, you can find present value. In this question, the present value of 25 lakh has been found out to be 12 lakh 50,622. So you can find present value. So see here, you put present value, rate, NPER, PMT, FV type. They will be there. Rate suppose is 8%, NPER is number of years is 9. PMT, nothing is to fill future value. In future, you require 25 lakh, you put 25 lakh here. So by default, or you put 0, it will be your, you can do it easily. So rate is 8%, NPER 9, nothing in PMT, and FV is 25 lakhs. See here how it to find PV. You put equals to PV, bracket shuru. He asks you rate. See here rate. Rate is 8%, comma, NPER number of year is 9. Nothing is to be fill in PMT. You have to fill future value, which is 25 lakh, comma 0, 12 lakh 50,625. See here with, if you calculate manually, you would have get the same result.
Sir, there is one question. Why these answers are coming with negative sign?
It is inbuilt. Otherwise, if you want, you have to put negative before 2 lakh 25 lakh. It doesn't matter. You are concerned with the value only.
Okay, sir.
So similarly, if you have to find this accumulative sum, you can calculate the accumulative sum with the same formula which was FV. Here you are depositing every year a sum. Now it will be PMT. PMT means you are the sum which you are depositing every year. Instead of PV, it will be PMT now. So let us suppose rate of interest is 7%, NPER is 18 years, and PMT is 5,000. See here, answer is 1,70,000. Here in Excel, you will get the same result. Equals to FV bracket rate. Rate is 7%, comma, NPER is 18 years, for 18 number of years. Payment, you deposit 5,000 every year. So either you have to do PMT or you have to do fill PV, one of them. So here amount is PMT is amount which is to be deposited every year, comma, then for PV another comma, and for type you just type 0, bracket close. It is approximately 1,70,000. So for accumulative sum, you can use this formula directly. Similarly, for YP single rate, you can use the formula. YP single rate, you need not to remember the formula, which is the most difficult formula to remember. See here. You can fill it as a rate is 9%, NPER is 5 year. So see here, here in case of YP, you are depositing, getting PMT every year instead of future value. So here you will be adding PMT. So PMT is 30,000 every year. So you put all the values, you will get the result, which is 1,16,690. Otherwise, if you have calculated it manually, you would have get the same result, 1,16,670 manually. See here how to proceed in this case. Equals to PV, bracket शुरू, rate is 9%,
Sir,
comma,
Excel sheet is not visible.
sorry. It is clear now. Rate is 9%. Time period NPER is 3. Payment is 30,000. Nothing is to be filled in FVs, just a comma and 0 for ordinary annuity. You can do it in this way. And you can also calculate sinking fund coefficient with this method. For sinking fund coefficient, shortcut is PMT. Rate, let us suppose rate is 8%, NPER is 10 years. So you need future value. So future value, let us suppose is 7,000. Nothing is to be filled in PV. So you put all the values, you will get the result. See here. Equals to rate PMT. Rate is 8%, comma, for 18 years. Nothing is to fill in present value, future value you require 7,000, comma, 0. You can get this value. And if you have to calculate in case of sinking fund depreciation, if you have to find coefficient of sinking fund, so in that case you will be filling this amount as 1 rupees. Rate, let us suppose, is 8%, comma, for 18 years, nothing is to fill CFE. तो अगर आपने सिंकिंग फंड के लिए डेप्रिसिएशन निकालनी है, तो वहां पे आप फ्यूचर वैल्यू जो है आईसी निकालना होता है, वहां पे फ्यूचर वैल्यू के लिए वहां पर 1 पुट कर दोगे, क्योंकि अब वहां पे आपको सिर्फ कॉफिशिएंट चाहिए। और एस के लिए भी आप 1 पुट कर दोगे, एस निकालने के लिए, फ्यूचर वैल्यू निकालने के लिए, कॉमा 0 कर दोगे तो वो आपकी आईसी की वैल्यू आ जाएगी। वहां पे भी आपको आईसी निकालने की भी जरूरत नहीं वहां पे। वह ये याद रखना है कि जब आपने आईसी इंटू एस करना है, तो वहां पे दोनों जगह पे आप वैल्यू जो है फ्यूचर वैल्यू को 1 रखो, और जो पीएमटी उसमें होगा फ्यूचर वैल्यू वाले में, वहां पे भी 1 रखोगे। तो इन दिस वे यू कैन यूज एक्सेल easily for your Another thing, yes, hold on, I will be checking whether it is there or not.
फ्रेंड्स, अगर आपका कोई भी डाउट है तो आप पूछ सकते हैं. यू कैन रेज योर हैंड और डायरेक्टली अनम्यूट योरसेल्फ एंड आस्क द क्वेश्चन if you are having any doubt related to any topic we have learned till now.
Sir, when it comes to these indexation, those indexes in the questions, examination questions are given. But where do we find those indexes in the real life?
It is available on net, sir. On the internet you can find out.
Where exactly, sir?
It is you just type on cost CII for different years. It is available.
No, that would be applicable probably to for indexation, that would be applicable to properties or something. But when it comes to plant and machinery of different kinds, when we are looking at that, where do we find that, sir?
For that, sir, Sandeep ji can better explain, sir.
So for that, there is a special website of Government of India for this economic survey. I think I am missing that name of that website.
Economic advisor, sir.
Yes, sir. Yes, sir. In that you can type your requirement of a particular type of machine or that particular segment. You will get the required detail.
There's a problem there, sir. Economic advisor site I've seen and I've tried to, there are different series and the basis of different series, whether it is 11, 12 or 21, 22 or whatever, the basis is different. And if the period that goes overlaps two series, how do we club those two series? That is.
So for that, we are organizing a special session for that particular purpose, indexation, for plant and exclusively for plant and machinery on probably 5th of April, 5th of April 2025. You can join that session. That will be of 2 hours, and each and everything will be explained there, and the websites and how to use the different websites and different data from that particular site, and different sites will also be explained in that session.
Okay.
Sir, I'll add a small, short answer to
Yes, sir. Yes, sir.
Kurma
Yes,
sir's
sir.
question.
Yes, sir.
There is a linking factor also available on Office of Economic Advisor site. That linking factor is used to connect different series. You can check that also.
Yes, sir. Bilkul.
Chaliye, we'll discuss this in detail on 5th of April, sir.
Yes, sir. We will
Okay.
discuss
Yes.
in that session,
Thank
and
you. Thank
a
you
few
very
case
much.
studies will also be there related to everything, sir.
Thank you, Singh sir. Thank you, sir.
Rajendra sir, are you there?
Yes, sir. Yes, sir.
Yes,
Just
sir.
a minute.
Sir, I have one question.
Just hold on, sir. Here, sir, someone has asked how this dual rate works. So basically, so let us suppose net operating income is 46,000, remunerative rate is 8%, and accumulative rate is 4%. Why it is different? Why it is taken? See here.
Vipin Gupta sir, this is the answer of your question, sir. Vipin sir. Vipin
Here,
Gupta.
sir, YP dual rate, you know the formula is 1 upon R plus IC. And for IC, you know the formula is capital R over 1 plus R is to power n minus 1. So IC you calculate, IC comes out to be 0.024. And YP dual rate comes out to be 1 upon 1.08 plus 0.0024. It is 9.164. See here, capitalized value will be 46,000 into 9.614. So 4,42,244. So value comes out to be 4,42,000. So now see here, sir, out of this 46,000, some portion will be spendable income and some portion is to be deposited in the bank in the form of sinking fund. How this is done? See here, out of 4,42,000, see here, 8% is your remunerative rate, means 8% of 4,42,244 is 35,379, and the remaining 4,42,244 into 0.04, 10,614. This is the amount which you have to deposit in the bank every year for 25 years. And if you deposit this 10,614, means you calculate its cumulative sum formula is 10,614 into FV minus 1 upon R, means 10,614 into 41, this will be 41.64. It means you will be getting an accumulated sum of 4,42,244 from the bank. Means out of 46,000 you are getting as income, you can spend 35,379 and remaining 10,614 is to be deposited in the bank at the rate of 4% for 25 years. Again, you at the end you will be getting, see here, what you will be getting, the same amount which is capitalized value as on to.
दिस इज द बेस्ट एग्जांपल.
Yes, sir.
नॉर्मली ये कंफ्यूजन होता है कि सिंकिंग फंड कहाँ गया या कहाँ से आया. तो अगर आप
So
इसको
why we are using dual rates, sir? This is the thing. I think
Yes, sir.
the doubt is clear.
Now it is very much clear, sir.
मिस्टर मुकेश वर्मा सर, आपका भी एक डाउट था सिंकिंग फंड के ऊपर. इज इट क्लियर नाउ? कुछ और क्लैरिफिकेशन चाहिए तो पूछ सकते हैं. मिस्टर मुकेश वर्मा. मुकेश जी, आर यू देयर?
Sir, I was on mute, sir. I was on mute, sorry.
यस.
Now with this example, it is very, very clear, sir. But
सिंकिंग
if I
फंड कहीं बाहर से नहीं आया सर, हम उसी में से एक्युमुलेट कर रहे हैं.
इसको extrapolate करूं मैं, sir, तो if we increase the rate from say 4% to 10%, do you think I'll be able to take care of that 6% inflation and accumulate my sum to that extent or no?
Sir, basically, the things is that you have to use this YP dual rate where you have to use it. That is the most important thing. There are 4 types of YP. YP single rate, which is 1 upon R into 1 minus PV. YP reversion to perpetuity. Then YP perpetual, which is 1 upon R. And then YP dual rate, which is 1 upon R plus IC. So where do you use this YP dual rate? Why this sinking fund concept is required? You do not need sinking fund concept everywhere. So let us suppose you have taken a cinema hall on lease for 35 years. You are getting certain amount out of it, certain profit, and out of which you are paying to the lesser some lease rent. But after 35 years, what will happen? The cinema will be returned back to the owner. You will not have anything with you. Your profit will end all of a sudden, and you don't have enough money with you to get lease of some other cinema. So in that case, what you will do? You will deposit every year certain amount in the bank so that you are able to have certain amount of available with you, that after 35 years you are again able to get another cinema on lease or anything you can buy any other thing. So what you will do, that instead of spending all the amount which you are getting in the form of profit, you will deposit certain amount in the bank. And the thing is that when you are doing valuation of these type of properties, these type of properties are called depreciating or declining type of property. There you have to use this concept of whether he is depositing, whether the owner is depositing sinking fund or not. But it is your duty to use this sinking fund coefficient so that you are on the safer side, because the value will reduce drastically if you use this YP dual rate. You will be on the safer side. As a valuer, you have to use YP dual rate here.
देखिए, जब भी डिमिनिशिंग इनकम हो, जब आपको लगे कि एक टाइम के बाद इनकम खत्म हो जाएगी उस पर्टिकुलर एसेट से, तो आपको कोशिश करनी है जो आपका क्लाइंट है वो उसी कंडीशन में बना रहे। तो उसको वो ऐसा उस वक्त उसके पास ऐसी फिगर होनी चाहिए, जैसे बिल्डिंग डेप्रिशिएट होकर गिर जाती है या उसको रिपेयर की जरूरत है, तो उसको ऐसी अमाउंट उसके पास होना चाहिए कि वो दोबारा से एक एसेट क्रिएट करके दोबारा शुरू करे। लेट्स टेक एन एग्जांपल फॉर प्लांट एंड मशीनरी। अमर सिंह सर एक बहुत बड़ा टैक्सी का बिजनेस चलाते हैं, उनके पास एक टैक्सी है। अमर सिंह सर बहुत रिनोन्ड आदमी है, एक टैक्सी का बिजनेस चलाते हैं उनके पास। अभी उन्होंने एक नया टैक्सी खरीदा, लेट इट बी वो 5 लाख का है। आज वो उनको इनकम दे रहा है, लेट इट बी 10 to 20% पर ईयर। आफ्टर 15 ईयर्स उनका लाइसेंस जो रजिस्ट्रेशन है वो एक्सपायर हो जाएगा, गवर्नमेंट उस टैक्सी को चलने नहीं देगा 15 साल के बाद। अमर सिंह सर, मैं सही हूं? एज पर रूल्स ऑफ द गवर्नमेंट। तो 15 साल के बाद अमर सिंह सर को तो कंटिन्यू करना है अपना बिजनेस, और टैक्सी 1 हो या 10 हो उनको कंटिन्यू करना है। तो अमर सिंह सर आज से ही इतना पैसा अमाउंट एक जोड़ना शुरू करेंगे कि 15 साल के बाद वो टैक्सी अगर ऑब्सोलेट हो जाता है या गवर्नमेंट की वजह से, कंडीशन की वजह से, आरसी की वजह से वो नहीं चल पाएगा, तो नया टैक्सी उस वक्त शुरू वो ले सके और अपना बिजनेस एज इट इज कंटिन्यू कर सके विदाउट एनी ब्रेक। लेकिन उसमें एक प्रॉब्लम ये है, एज अ इंजीनियर जो डाइजेस्ट नहीं होता है कि वो आज की डेट में जो टैक्सी का वैल्यू है वो 15 साल के बाद भी वही ले रहे हैं। दैट इज अकाउंटिंग प्रोसीजर। हम लोगों को डाइजेस्ट नहीं हो पाएगा एज अ इंजीनियर, लेकिन ये है तो है, मानना पड़ेगा। तो वो टैक्सी का वैल्यू वही ले रहे हैं जो आज की डेट में है। मीन्स अगर बिल्डिंग आज लेट इट बी 5 लाख का है, तो वो 15 साल के बाद ही 5 लाख ले रहे हैं, लेकिन उस वक्त तो कंस्ट्रक्शन कॉस्ट बढ़ जाएगा और भी काफी चीजें ऐड हो जाएंगी। तो वो चीज एज अ इंजीनियर डाइजेस्टेबल नहीं है, लेकिन मानना पड़ेगा कि जो वो कह रहे हैं वो सही है।
सर मेरा सवाल